The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m., 24 minutes to go until the start of trading, and you got markets trailing off a bit. We put things on a 5-minute chart. You accelerate right into the close yesterday. 62.65 from there. We've traded lower overnight. You get a little bit of a trade lower this morning. We're down right now 18 points or 0.3%, 62.35 in the S&Ps. NASDAQ 100, we're negative by 0.4%, 92 points in the red. 22,799. The Dow barely in the red by 0.1% off 35 points, 44,354. The Russell negative by 0.6% right now off 12 points, 2179. Bitcoin trading lower with the market off $1,445 at 106,000 for Bitcoin. Crude catching a slight bid. We almost hit $66. Check out that move from earlier this morning. We back off a bit. Crude up by 49 pennies at 65.60. And it seems like every day the action right now is in yields. It's in the dollar. Of course, we have the unemployment, I should say the non-farm payrolls, the employment report Thursday at 8:30. And yeah, we got movement all the way up to 112.12 in the early session. And check out the move since about 7 a.m. 4.23 is where we are right now on the 10-year. And yeah, we were as low as 4.19. We had a 4.1 handle, 4.19, just like that. But on a daily basis, you have higher price, lower yield, 4.23 coming at you. And how about the dollar, man? It's not stopping. Now, we were all the way down to 96.37 when we were sitting with a yield of about 4.2%. Yields have climbed a bit. The dollar has bounced a bit. We put it on a 15-minute down to 96.37. But, boy, you talk about it. It's not stopping. I feel like it's all I'm talking about these days with the dollar weakness. We're way below 100. We've broken those lows. And how about that for some follow-through, man? You're talking about the 7th red day from 99.50 to 96.50. In the span of 10 days, right? 7 trading days, 10 days, June 23rd to July 1st, first trading day of July. We got dollar weakness coming at you, and that is helping gold. Okay, not helping gold to all-time highs, but yes, helping gold. Quite a rally from the lows of yesterday. You're talking about a move of $110 right now from 32.50 early Sunday. Yesterday, we're chopping around at 3,300. Today, 33.62. Gold up by $55 on some dollar weakness right now. And how about Elon? So, Tesla down another $17. Let's take a look at a daily. We're going to open at a nice round number of 300, man. That's the high. That's an area. You trade below 300, 200 is the next stop. And it is pretty remarkable. I didn't catch the entire press conference this morning, but you had Trump at the White House getting asked something about deporting Elon, and he's going to look into it. And it's pretty remarkable when you get the president talking about looking into deporting the richest man in the world, who is a U.S. citizen, talking about that he should go back to South Africa, and then talking about essentially punishing him for his free speech, which doesn't seem to get brought up at any time when this happens. But guess what? That's the world we live in right now, and Tesla's down 5%. And yeah, you could say he's got a lot of government toll in terms of what Elon has taken from the government. Why is he doing that? But that's not exactly how it's supposed to work, as he comes out against the government bill with his speech, and then the government threatens to punish him for that free speech by impacting any type of, as it goes. Nonetheless, Tesla, man, going to have a volatile session today. 299 is the number, down to 294 in the pre-market. And as I mentioned, this is an important number. You put it on this chart many times. You go back to the highs of 2023, right where we're trading right now, almost to the penny. And then on a shorter term basis, you put it on the daily. That was almost the high of March. We got up to 294 in April. That's almost right where we traded to. We got back there in May, and we bounced from that area as well. Jump over to Apple shares. Strong day for Apple yesterday as they're potentially thinking about teaming up with Anthropic or OpenAI. And yeah, pretty remarkable. A company of that size can't compete with these companies, and they're just going to use their services when AI is the future. But nonetheless, Apple catches a small bid up to 205. We check in on Microsoft this morning, trading about 497. We were up to 500 yesterday. Yeah, that close was something else, man. And how about Microsoft, all right? You take a look at Microsoft. On a weekly, you're potentially breaking this B point, man. That brings you up to 594. Okay? And look at that break you got last week. That's not how we got above it, but boy, that's a nice way to break away from it with wide price spread as you climb towards 600 number. NVIDIA this morning slightly in the red with the market. We closed yesterday pushing almost 158. We're trading at 156.43. We take a look at the volume on NVIDIA shares. There's some good volume. There's some good volume on these accelerations. I mean, check it out. Whether it's going back to last Wednesday and last Friday. Both nice days to the upside. Even NVIDIA, you're talking about trading from 149 to 158, and that is some good volume. On a daily basis, you did 269 million shares last Wednesday. You did 263. Those are the two highest volume days since the end of May, the whole month of June. So think about that, right? Wednesday and Friday last month for NVIDIA, that's not exactly weakness, folks. That is some strength. Remarkable enough. And, I talked to Steve Rhodes yesterday on the afternoon show. So check this out. This is a good one. This really got my mind thinking. And Steve had brought up chart of the S&P priced in other currencies. And when you look at it on that level, okay, the destruction in the dollar over the first 6 months of the year, you're talking about losing from 110 to 96. Now, it's a little bit, context is important. Yes, we lost that value, but you would gain that value from September. So we've had extreme volatility. So from the time you were September to January, now we've done this with gold, okay, but remember those dates. End of September to like the middle of January. That's when you had the strengthening going on. And so you go from September, here's where you're in the middle of the month. S&P is about 5,700. And you go into the middle of January when you're at about 6,000. Now think about this. The S&P at that time was remarkably strong, okay? Because you were priced in US dollars that appreciated in 10% of value. So globally, think about the appreciation of your asset if you wanted to turn it into any other currency, right? Not only were you buying it an S&P that went from 5,600 to 6,000, you were doing it in dollars that went up 10%. We'll be right back and finish this.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps down about 20 points or 0.3%. So you have Chairman Powell in Portugal this morning, and he is at a major central bank forum. So he is set to speak. We'll see if he has anything. Could make a few headlines today. Yields, as I mentioned, right now you jump back to that 10-year, you pull back a bit, and that, of course, rising. We were at a 4.19 handle. We're at 4.23 right now. You know, I was talking to a friend yesterday, right? And I'm saying, you know, it's amazing. And everything's related. Of course it is, right? You have the interest rates. You have the Federal Reserve Chairman, Powell, new chairwoman coming down the line next May. And then you get to the debt and the deficit. Treasury Secretary yesterday giving his view of pushing out longer-term debt right now. Why would he do it at the prices in terms of meaning they're going to look for those yields to come down, and then they will push out longer-term debt? I'm not sure that they're going to come down. So think about the potential there of saying, I'm just going to keep all my debt short-term because I don't like what the market is giving me for long-term yields on the debt that I have. There is a potential there that eventually the market says, the reason why you don't like that is because long-term you have a problem, so we're charging you higher yields. If you keep running it as short-term, that's fine. But the short-term is never going to yield you a lower long-term if things just keep getting worse. So that's the tough part about not wanting to put out. This is not that abnormal of a yield environment right now. And so it was kind of interesting to see the Treasury Secretary talk about that yesterday. He had given Yellen a lot of grief about saying that it was political, not issuing more longer-term debt, right? Keeping it shorter term, claiming that by not issuing More longer term, they were keeping the cost of capital low. But meanwhile, when he's in that same position, he doesn't want to push it out longer term because it's a big number. It is a big number. But guess what? It's a big number because that's what the market demands right now. That is the price. And on a longer term basis, outside of where we were the last 20 years, we have a lot of recency bias. I think there's a real potential for that rate to be a little sticky. Now, with that in mind, right? Cuts are coming, man. They are coming. Okay? And the risk, of course, is Chairman Powell, he's not going to get into forecasting who Trump's going to choose next, whatever. He's going to play it with the data they have right now, and that data is aligning. And we get jobs data on Thursday, but that data is aligning that inflation is not as big of a concern. We're seeing some weakness in the economy. The non-farm payroll we're looking for is 100,000, 110, 115,000 jobs added for the month of June. Unemployment up to 4.3%. Wage data will be in there as well. But I was joking with a friend earlier to get to the point, saying, man, can you imagine if Trump put somebody in? Trump's calling for 2 full percentage points of cuts. Now, his supporters will say he doesn't really mean that. Don't take him literally. Okay, he's not going to put in a Fed chair who's going to cut by 200 basis points overnight. You're probably right. But that's the man who's going to choose the position, and there's going to be a lot of pressure. And could you imagine whatever would happen? And it would not happen. The market would flip out, and inflation would be a huge concern. Because could you imagine, right, what would happen to the housing market? And this is just a demonstration to understand the complexities of bringing down the rates, how it's going to impact everything. And listen, being a real estate investor, the president's a huge real estate investor. Real estate prices across the board. Okay, you bring down yields to that degree. Think about what would happen if you had mortgage rates go from 6.5% to 7%, where they are right now, to 4.5% to 5%. Okay, the average home price would probably go up by $100,000 overnight. Probably, and I'm not exaggerating. Probably $100,000. Now, the counter argument against that, right, is that there's a vast level of supply in housing of people that are trapped into their mortgages and do not want to give up, rightfully so, a 30-year mortgage with a 3.75% loan, a 3.5%, a 3.25%, a 2.75% loan, right? Well, what happens is supply loosens up as yields come back to a more reasonable level. There will be more supply, but it's the level of payment adjustment on any type of substantial drop has a risk, and the risk there, right, is because that's great as long as inflation doesn't roar back up. Okay, so the risk there is inflation goes back up, right? You cut rates too much, everybody's got piles of cash because they can buy it with their signature. The cost of buying a home goes dramatically down because we're now in a period. If you get that adjustment, it's going to feel like a shock in a great way to the market, right? You have everybody looking at buying a home. You walk in, you look at the price of that home, you run the payment information. The mortgage tells you, the mortgage broker tells you what your monthly is going to be on, a $400,000 mortgage at 6.8%. And you say, man, that's craziness. And I'll pull them up after the break because when you get those numbers, man, they are mammoth differences. And so the point being, that's coming down the line. Okay. And if that's coming down the line, you better believe the market's going to get ahead of it. And to bring it back to the conversation where we're coming into the last segment in terms of the S&P and the dollar, okay? So you had the dollar dramatically increase in strength at a time period. During this period of time, you had the S&P trade from about 5,700 to 6,000, right? From October 1st to the middle of January, okay? You go back to the S&P, you're talking about October 1st at 57 and change, to January about 6,000. If you put that in any other currency, okay, the S&P was on fire because even when the currency strengthened by 10%, you still had the index go up by 5% over that period of time. Now, the tariff concern was its own deal, we'll call it, as in there was a lot going on with currencies, with equities, with valuations, etc. But one of the things going on okay, is that as we have this dollar run to weakness, which did begin right on the peak of it, okay, things have really accelerated since March, and it's not stopping, is that part of the run on this S&P priced in U.S. dollars is that it's priced in a weaker U.S. dollar. So locally, okay, it's going up in price. But globally, that's just compensating for a weaker dollar in the same accord. And that, yeah, so you get dollar weakness, man. You're pricing it in U.S. dollars. You combine that with the inflation risks that run, because, yeah, we get that type of move. And then you look at the debt. And I think one of the only ways you do it is you can grow your way out of it, and you can inflate your way out of it as well. And growth goes with inflation. It does, hand in hand. All right, we're coming back for the opening bell, folks. S&P's off 19. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the equity market open, and your market slightly in the red right now. Hasn't happened in a while in the red, but nonetheless, S&P's negative by 0.2% right now. And yeah, we had some strong numbers on volume. To take a look at the daily on the S&P's, right? We do 1.26 million on Friday, and just under that number, 1.25 million. Relative speaking, though, decent volume, man, as we push higher. Now, today's Tuesday. We get the employment number on Thursday, but today and tomorrow, the final 2 trading days, full trading days, coming into Thursday and Friday on July 4th. That Thursday economic data, though, maybe keeping people at their desk. Yeah, check out that acceleration, man. So it's interesting in terms of you have highs out here from December of 61.63 in the S&Ps. You were as high as 61.66 in February. The 61.66, much lighter volume. That's a big volume bar from December 16th. And you take it out last week. Forgive me. Take it out last week on 6.6 million. That's a strong market, man. All right, let's check back in on gold. Yeah, speaking of, strong day on Friday for gold. I mean, you check out the volume. Look at the volume. We'll see how today comes in. Today will be an important day. Yesterday, you do 141,000 contracts in gold. Today, we're at about 100,000 contracts right now. Market trying to claw it back. S&P is positive by 6. We jump over to Tesla shares. Down by 6.9%. It's interesting when you have to factor in a tail risk that the CEO might get into a feud that he accuses the president of being a pedophile, but that's a statistical financial analysis, folks. You should be tail risking Tesla for a Twitter feud breaking out at any moment where he can, but it's to some degree. That's what's going on right now, man. You're down 7.5%. The level that you're talking about here, when you're talking about $23, okay, there's 3.2 billion shares outstanding. My goodness, $70 billion in market cap. 70 billion, B with a billion in market cap. All right, let's jump around to some of the Magnificent Seven. We're going to jump to Amazon in a moment, but Microsoft flat right now in the session. Apple following yesterday, extended the gains up by 0.6%. Meta shares off 0.8% right now. They've been on quite a run to all-time highs. Google off by 0.7% right now. We jump over to NVIDIA, down by 0.8, and Amazon right now flat on the session. So this one from the Journal. Excuse me. Out yesterday, okay, last night, I was reading it this morning, and yeah, there's some interesting statistics, charts in here. I like visual representations of data sometimes. Amazon on the cusp of using more robots than humans in its warehouses. Soon enough, it's just going to be the managers up there overseeing the robots, right? And so check this out. The number of Amazon employees per facility was peaking out at about 1,000. We're now at, what, 700? Okay, that's per facility. Meanwhile, the packages handled by Amazon end-to-end per an employee from that 1,000 per facility has gone from 2020 at around 2,500 packages end-to-end per an employee, approaching 4,000. So you've went from 2,500 packages per an employee to 4,000. Meanwhile, you've went from 1,000 employees per facility down to about 700. And I imagine that might even accelerate, right? Yeah. The number of packages Amazon ships per an employee, 3,870 from 175. Well, yeah, in the beginning, I'm sure, when they started that program, ratcheting up their own control of the deliveries. And yeah, it all started in 2012, man. Think about where they were going. They paid almost $800 million to buy Kiva Systems, which made robots that ferried shelves of products around. And look at these things. I don't know how you're going to be able to see it so well on my chart, but this is one of their newest facilities in Shreveport, Louisiana. And yes, I do own some Amazon in the long run in a retirement account. It's a great equity, okay, but this stuff's remarkable anyway. It is coming down the line. You look at these charts, and this is before the revolution of AI, when you think about where that can go. Yeah, it's about speed. It's about efficiency. Products move 25% faster through the facility than at other sites. When you're talking about, I think this is Shreveport they're talking about. Yeah, their newest facility. 3 million square foot facility, Shreveport, Louisiana. 6 dozen robotic arms sort, stack, consolidate millions of items. And, you know, there's a couple of the articles they link to in here. This one just from last week in the journal. So they're really on the Amazon puff piece. You know, pretty remarkable, right? Once you get to be a company like this, you get basically promotional pieces. I mean, how about this piece? This is a straight out promotional piece, man. Imagine that you're an investor and you're looking at this. The headline alone, right? That's what you want to see, efficiency. But when you see it in plain sight, another Amazon down by 0.2%. We check back in on Tesla, off by 7.4. Microsoft shares slightly in the green. One of the few equities right now. Microsoft up by pennies, up by 20 pennies. I saw an interview with Sam Altman last night. I think it was an older interview. But, you know, he was just talking, and this is where you get a little theoretical, but it's amazing when the theoretical, we see the changes that happen overnight, right? As in generative AI, ChatGPT, chatbots that you can communicate like a real human versus a chatbot that drives you crazy within 3 seconds. And he said, man, these robonoids, right? These self-robot AI bots, they're coming. And they're coming quicker than people realize. And he said, you're going to reach a point where you're walking down the street and you walk past like 7 different robots that are running tasks and doing things for other people, and you're going to feel like you're in a sci-fi movie, and I don't think people are quite ready for how quickly that is coming down the line. So that's some of the things, and I would agree. And who am I compared to the knowledge he has, and he's talking his own book, as always. But what I do know is that it's always difficult to imagine the rate of change sometimes and how quickly things come. And this seems to be one of those moments, because the amount of times that I go to ChatGPT now versus ever going to Google, and how does something like that change overnight? That alone should be a monumental wake up. And Google, okay, they're going to be fine. Gemini, Google VO3, still haven't joined that one, okay? But that whole suite of products that they have, you add in YouTube in there, you add in the advertising, but to go from a monopoly on search for the first 23 years of the internet, as in almost even more. I found out about that sophomore year. I remember my roommate was into computers, Villanova University. I come back from my freshman year, so I arrive in 1999, maybe 2000, so 25 years ago. And he said, Google, you got to try this Google. Google's when you're searching the internet, only use Google. This is the best by far. They're the best. Sure enough, they were the best 25 years ago. And all of a sudden, it's like I never use them again. Yeah. Robots coming soon. But Tesla taking it on the chin today. S&P's off by 14. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Excuse me. All right, welcome back, folks. And yeah, you have Chairman Powell. He is at an event in Portugal, and that event just beginning. So you'll see some headlines come out of there. And right now, that's a weekly. Let's throw it back to a short term. We get the S&Ps right now, negative by 15 points. We jump over to yields. The 10-year right now, 112.01. No real movement at all on the chairman's words just yet. And I don't imagine, we'll see. We'll see if we get any action. 96.64 right now on the dollar. You talk a little bit of car sales. The headline, car sales hit a wall. Tariff-induced shopping spree subsides. And boy, this is going to be the interesting one on some of these, whether it's the GDP numbers, the imports, the cars, certain sectors that pulled forward all those demand numbers, all the imports coming into the country to avoid some of the tariffs that were potential there on Liberation Day. U.S. auto sales surged, but slowed down in June, with a selling rate likely falling to 15 million, the slowest pace in the last 12 months. Not surprising. I'm surprised it's not going to shrink. Think about it. If you knew that you needed a car, I hope you went out and got one. Okay, because there's still a potential. And it doesn't mean you're going to get a price drop, because what they also talk about in here is, one of the big problems is the average cost of a new car is almost $50,000. Yeah, that's a problem too. Now, what can help with that? Lower yields, right? Lower payment to finance that potentially. But yeah, you're talking about the annual selling rate, okay? Likely fell to 15 million. That's the pace. It's not 15 sold, it's 15 million. Annualized rate is what you're talking about here, okay? Annualized rate is what you're talking about. Down from 16.3 million in the first 6 months of the year. And yeah, those are your averages, and you're talking about 48 grand, man, but it should not be surprising. The average monthly car payment is $750. So think about how many people are above that number. That has more people stretching car loans to 7 years. Man, 1 out of 8 loans is pushing out 7 years, and I can't fault people. But think about the shift. So think about this, right? This is where it goes from 9% to 12%, as in the amount of people financing for 7 years on their automotive loans. Now, I hope that's a great car, man, and you're not driving it into the ground. Okay, yeah, a new car will last 7 years. It will. But man, you're really stretching it, right? It's such a high payment to push out to that number. Because when you run all these numbers, the average payment is $750. But meanwhile, You now have 1 in 8 people financing it for 7 years. That number was 1 in 11 a year ago. So it's a much bigger number when you factor in that the monthly payment is going up at the same time that they're stretching the payment out longer. The monthly payment should be going down. All right. Ford up by 0.1%. We dump over to GM up by 0.4%. That's Stellantis? I think it is. Yeah, it is. STLA, Stellantis. Take a look at this thing. Yeah, look at that, man. And how about Ferrari? Look at this equity, man. From $31 in 2015 to $500, you're pushing the relative highs. Quite a pullback during the tariffs to 400. You're pushing the highs. Let's see how we're doing on volume for Ferrari. Some nice volume off the bottom as usual. All right. That was good volume last week, but couldn't quite get above where we were on June 9th. Would have been nice to take that out with volume, right? 2.2 million shares versus about 2 million shares. Decent volume, though. And all the numbers are going to be light this week with 3.5 days of trading. You can always take that number, average it out, multiply whatever weekly volume you get, okay, by 5, divided by 3.5. Easiest way to do it. On a weekly basis, man, this market looks strong. No subsiding of volume whatsoever. And the NASDAQ, you actually have a pickup in volume on that acceleration. All right, you look at some other anecdotal data. We'll throw it out there. Now, surveys can be dramatically misleading in a time of politics driving everything. But this is a survey from Alex Partners, online shopping activity. This is the headlines you do want to be careful of, though, because I'm much more interested about the real data, because everything seems to be a little bit off in terms of everyone's perspective of how everything's going to impact everything. You always want to try and alleviate that, but that's the point of a conflict of interest, folks, a bias, everything. No matter how good you are at trying to remove a conflict of interest, you can't do it. If you could do it, if people could do it, if we thought that the most astounding people were able to remove conflicts of interest, then Supreme Court justices would say, you know what, I know there's a conflict of interest. No, even they are supposed to remove themselves, because nobody can devoid themselves of bias and conflicts of interest all over the place. But hey, all right, let's jump to Lululemon. Lulu up by 1.8% today. And yeah, they're suing Costco. What's up with that, Lulu? Well, Costco right now flat, but Lulu is saying that they're stealing some of their products. And isn't that usually how it works? And what do they make? They make pants and shirts. And yeah, I'm sure that there's a lot that goes into it. Lulu would argue the contrary in terms of that there is a lot that goes into it. But yeah, they claim it a lawsuit that Costco has unlawfully traded on its reputation, goodwill, and sweat equity by selling unauthorized and unlicensed apparel that uses knockoff, infringing versions of its patents. So they'll go after that. So Lulu alleges that Costco is known to use manufacturers of popular brand-rated products for its private label, but the company and the manufacturers don't tell customers of the connection. Because of this, Lulu claims this leads some shoppers to believe that Kirkland-branded products are made by the authentic supplier of the original products. It's going to be an interesting one to play out. And they sell them for $19.97, and Lululemon sells them for $100. And Lulu wants a jury trial. So they sue. Got to be interesting trying to protect selling athleisure, right? Athleisure. Market clawing it back. S&P's just off by 6, Dow up by 140. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And the Senate, they're still going. They're on 45 votes, the most ever. The prior record was 44. So by early this morning, the Senate held 45 votes over about 24 hours, surpassing a previous Votorama record in 2008 of 44 votes. It will soon face a pivotal test in the Senate, following days of negotiations. Republican leadership this morning still working to cobble together support from enough of its members to get it across the finish line and onto the House, ahead of that self-imposed Friday deadline. J.D. Vance, he's marching on the Capitol this morning. Typically a sign that they're coming to the Senate, as he's the potential deciding tie-breaking vote. And yeah, how about the provision in there? Like, and this is the one that got pulled out, 99-1, I think. Let's see if I have this one up. In terms of senators pulling out the prohibition of regulating AI for 10 years, pretty sure that one is getting pulled out. 10 years. Can you imagine where things are going to be for 10 years? You can't regulate things for 10 years? We might be all living in the Jetson in 10 years, man. 10 years. 2035. Watch out. All right, we jump around to some of the leaders in this market, and you got the Dow leading the way right now, actually. UNH up by 1.6% right now. Goldman up by 0.5%. JP Morgan up by 0.3%. Home Depot up by 0.1% right now. Yeah, Amazon slightly in the green. Microsoft flat this morning. Apple extending the gains. Look at that. Up by 1.8%. Yeah, why not, right? The market loves it. They said, yeah, don't spend any money developing our own AI. Just pay somebody else because you're not doing it right. You're spending a lot of money. Apple up another $3.70. And on the flip side of that, Tesla down by $15 to $301. All right, folks, stay tuned. We got a man, Basil Chapman. He's coming up next with the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge. Fast Market at 12. Larry Pesavento at 1 o'clock. And I'll see you back here at 3 o'clock, folks. Have a great Tuesday, everybody.